So the last part which we are looking at under GST is tax invoicing, invoices and other things. What are the tax invoice and others? As we have looked at, invoice is a very important document because based on it only input tax credit can be claimed. Therefore, it is very, very, very important. Without a tax invoice, nobody can claim credit. That is what we are saying. Now, when should it be invoiced? When should it be issued by a registered person? We've already seen time limit. We have already seen this. Time limit is 31(1), covers the time for issue of invoice in the case of supply of goods. It is before or at the time of removal of goods to the recipient, whether supply involves movement of goods or delivery of goods or making available the goods to the recipient. That is the time it has to be issued. Three situations. Number one, at the time of removal of goods for supply to the recipient, when you're taking from your factory, or when you're delivering it to the customer, maybe he is coming and taking it, or when we are making it available to the recipient, making the available goods to the recipient. So all these three are the situations when invoice has to be issued. The obligation of the supplier to issue the invoice latest by performance of any of the above three activities. For instance, X dispatches to Y from his depot on December 10th, 2019. X can issue the invoice on or before December 10th. The following months to be kept in view. Continuous supply, because sometimes it's a continuous supply where successive instatements of accounts or successive payments are involved. The invoice shall be issued before or at the time of such payment. Especially in construction, this comes. So it depends on the agreement that's saying first will be on foundation, on completing the foundation, then will be next lintel, then will be roof, and so on. It can be agreed upon. So those are the timelines by which the invoice has to be issued. Goods on approval or base approval, invoice to be sent on approval is required to be issued within 6 months from the date of removal of goods or date when the receipt has been accepted. So you are sending the goods to X, you are P, you are sending the goods on sale of approval. You at that time you don't raise the invoice, right? Because he is not approved it. So he can hold it till 6 months. After that you have to make it into a sale and tax him as GST, and you have to pay the GST. Whether you collect or not is not a question. You can keep the goods with him for 180 days. Beyond that, if it becomes a sale for GST, and you have to collect GST on that. That is why it's saying 6 months from the date of removal of goods. You have given it, but within 180 days he has not responded. Then you have to bill him or take it back, one of the two. Or he accepts it prior to that 180 days. So from that date you can bill. That is it, whichever is earlier. These all we have seen. Rule, that is 30 days rule, 45 days rule, we have already discussed this. I'm not going there. 30 days banking company, 45 days. Continuous supply, already just now we saw, that is benchmark, whatever after foundation, after roofing, after all that. Now the most important thing is, what are the contents in a tax invoice? These are the contents: name, address, GSTN number, consecutive serial number, date of issue. If recipient registered, his name and address, GSTN number, UIN number. Recipient is unregistered and value of taxable service below 50,000, name and address of the recipient and the address of delivery along with state code. If recipient is unregistered and value of taxable is less than 50,000, name and address of the recipient and address along with the name, state code. The recipient request that the details be recorded in the advert. Then only you need to record, otherwise it's not required. Then HSN code, description of goods, quantity in the case of goods, and unit in unique quantity code, taxable value of supply, taxable value of supply of goods and service after taking a discount, rate of tax, amount of tax, place of supply, address of delivery, whether tax is payable on reverse charge, And last one, signature. So in the exam, they can ask you what are the contents to be recorded in an invoice. At least give five items to be recorded in an invoice. Please make sure that you know it, because it's very simple. 5 marks you will get. Just write 5 points. Harmonized system, I've already discussed. I'll again just briefly tell. Harmonized system is what? It's an international harmonized system of nomenclature. It was developed by World Customs Organization with a vision to classify the goods all over the world in a systematic manner. So it's not India specific, it is world specific. There are 6-digit uniform code that classifies 5,000 products. In India is using HSN in an indirect tax since 1986. Indian version is a much more detailed classification that added another 2 digits to the 6-digit nomenclature. So India it is 8 digit. Under GST regime, suppliers are required to follow three-tiered system of HSN. So they can ask you HSN code, how much is required to be maintained. So up to 1.5 crores, not no need to mention HSN invoice. 1.5 crores, 2 HSN code. 5 crore and above, 4 HSN code. Again, there is some amendment they have done. Those who are in export business, they have to mandatorily quote 8-digit HSN number. If taxable value is less than 200, is not HSN, is separate. Need not issue a tax invoice at all if the value of goods and service supplies is less than 200. The following conditions are to be satisfied. What if the recipient is not registered? It does not require an invoice. A registered person who supplied goods shall issue consolidated invoice for such issues at the end of the day. So that means small sales, small, retail sales, they need not invoice because it's less than 200. Therefore, they can do a consolidated invoice at the end of it. The provision is not applicable in the case of supplier who is engaged in making supply of service by way of admission of cinematograph in multiple screens, applicable in the case of. So that means for cinema houses, it is not required. No need. No need for raising bill because your ticket is good enough. Other things are there. I'm not going into these things. I am also sharing this. I just want to tell one or thing. Bill of supply. What is bill of supply? Bill of supply is nothing but a registered person supplying exempted goods and service and or paying under composition scheme, alternate scheme, shall issue instead of tax invoice a bill of supply. Why bill of supply? Because there is no tax there. There is no tax. So that if tax is there only, there will be need for there is a need for input tax credit, right? Somebody can take. Here there's no tax. Look at it. Name and address, consecutive serial number, date of issue, name and address of GSTN, harmonized code, description of goods, value of supply, signature. See, tax is not there because tax he has to make payment on uh, composition basis at a fixed percentage of turnover. Similarly, you've got something. These are other documents that are required. Receipts. What is a receipt? A registered person shall, on receipt of advance payment, will issue any supply of goods or service, issue a receipt voucher or any other document. Now again, as I told you, receipt is not at all relevant now for goods because advance payment is now not taxable. But for service, it is there. So if you receive service, you are supposed to create a receipt voucher. But to my knowledge, nobody does it in a practical way unless some company is having a software which does that. Evidencing receipt of this thing. So what are the contents? So be careful in the exam, they can ask just the contents. So you have to be careful with that. What are this thing on a refund voucher? Refund voucher comes into the picture when advance payment is being reversed. Again, as I told you, this is not very relevant except for service because now advance received from for goods is not taxable. Therefore, this is lost its significance. These are, but still, you try to remember the at least summary. Some software, if something comes, write something. Don't just leave it. Payment voucher. This is coming in the case of reverse charge. A person, registered person, is liable to pay tax under reverse charge shall issue a payment voucher at the time of making payment to supplier. The payment voucher shall contain the following: name and address, consecutive thing, date of issue, GST and description, amount paid, etc. etc. Those cases, payment voucher is required. When payment voucher is required? When somebody is going to pay tax based on reverse charge basis. Then there is something called revised tax invoice. There is a format for that, you have to, so that the registered person may, within 1 month from the date of issuance of certificate of registration, issue a revised invoice against the invoice already issued during the period beginning with the effective date of registration till the date of issuance of certificate. So what happens is that you have applied for registration, you know you are become taxable, but you don't have a GST number. So how do you raise a bill? But you raise some bill, but it's not a tax invoice. Therefore, you raise a bill. Later on, only you get the registration number. After getting the registration, you issue revised invoice, tax invoice, revised invoice. What is that revised invoice is given here. A registered person within 1 month from the date of issuance of certificate of registration issue a revised invoice against the invoice already issued during the period beginning with the effective date of registration till the date of issuance of certificate of registration. So from the time your effective date has started till the date of registration, when you get the number, then only you get the number. If you have issued anything, for that you have to issue a revised invoice. I think that's it. We have more or less completed. I'll immediately upload all this. You take your time and go through it. And I think more or less we have completed. Tomorrow we will do standard costing, day after standard costing, and we'll close. Okay.